In this video, I cover why I think the fashion market is about to experience the 2020 to 2021 sales boom this year in 2024. The intention of this document is to give you insight and help you prepare for this potential boom again and avoid the mistakes many fashion brands will make during this boom. And I'll go into what mistakes most fashion brands make or will make later in this video. And perhaps you made some of these mistakes yourself in 2020 to 2021 that led to problems in the last few years or even now, like sales slowly declining, ROAS declining, and cash flow issues, perhaps, right? If so, this will give you clarity on why that happened and how to avoid making the same mistakes again. And perhaps maybe you did not have these you did not make these mistakes and you didn't have some of these problems, then this will help you prepare to avoid these problems. I usually make videos specifically about fashion ads growth and scaling fashion brands online since that's what we specialize in. However, I started sharing more of our market thoughts on Instagram at Digiceptual, and many of you expressed interest in learning more, so I thought of making this video. If you're new here, quick background, we specialize in scaling fashion brands online by getting them new customers with bestseller ads for over 4 years. Here are some of the fashion brands we scale, and we have over 14 video testimonials from fashion founders like yourself on the results and experience working with us. And if you're watching this video, if you're watching the video version, you can find more info in the video description or the link in bio, depending on where you're watching this, right? And you'll see a lot of testimonials like these two on the link. And I'm Brandon, one of the co-founders of Digiceptual. Now, for this document, I do have to add a disclaimer that this is just my thinking and opinion based on data I have access to and our experience from scaling fashion brands. I don't have a crystal ball that can predict exactly what will happen, so I could be wrong. Now, there are 4 main points I will be covering: how market cycles work, why I think we're at the beginning of the boom, what to expect in this upcycle, and how to prepare for the upcycle. I think it's important to start with market cycles to give an understanding of exactly how it works so it can help you understand why things happen the way they do. So let's jump into the first part, which is market cycles. You see, the fashion market, like every market, experiences up cycles and down cycles, also known as bull market and bear markets in investing terms, right? So up cycle and down cycle. I will break down what happens in both cycles. See, during an up cycle, the market is just going up and up. This is exactly what was happening in 2022, early 2021. How? On the consumer side, interest rates were at a near all-time low. So for example, the mortgage interest rates, right, in 2021, it was the lowest 30-year in mortgage rates ever. Right? The government fueled consumer spending by injecting massive amounts of liquidity, aka money, into the market via programs like stimulus checks. Softwares that offer buy now, pay later, like Klarna, starts booming. Risky assets like crypto that consumers own were only going up, which means they're making more money almost every single day, which means they will spend more. Everyone was locked inside their homes because of the pandemic. With everyone locked inside their homes, free money coming in from like stimulus checks, right, risky assets going up, and bored out of their mind, all their attention shifted online. And where attention goes, money flows. And that money is only flowing one way, to online businesses, right? So money, liquidity flows to consumers. Consumers' attention flows to online, and money flows to online businesses. All of this money flowing from consumers results in online sales going ballistic for the fashion market. Every month, online sales are at a new all-time high, and it feels like it won't be stopping anytime. And to add more fuel to the fire, with interest rates being at a near all-time low, debt like loans and credit look extremely juicy. The government injects massive amounts of liquidity into the market on the business side via programs like the PPP forgiveness program, right? Basically, free money from the government. I took advantage of this too. Running and scaling Facebook ads was on easy mode. It didn't require much skill to run. You could scale at an insane ROAS with practically your eyes closed. Investors, venture capital, VC, and private equity, PE firms are hounding deals and investing into brands. All of these factors cloud judgment for many brand owners, and they start making very risky moves just for the sake of growth. For example, many brands start leveraging a lot more debt than they need to, or signing leases on bigger warehouses that they don't need, or hiring employees for roles that aren't needed at all for the sake of growth. Some may let their ego get in the way. They focus on being on the front page of magazines and making news headlines of how great of a CEO they are and how much their brand is growing. Many people in the market were shouting things like, "This is only the beginning," or "We will be going higher." When I start hearing things like this in the market and seeing it getting more outrageous, That's when I think we are near or at the peak of an upcycle. I say near or at the peak because I doubt anyone can accurately predict the exact peak of an upcycle. At the peak of an upcycle is the start of a down cycle, which I would say roughly around Q2 of 2021. So which is like about here, right? The start of the down cycle. Why? Because of mainly one thing, inflation. You can see inflation from 2020 to 2021, it jumped by almost 5.6%. With all this new money being printed and injected into the market, the supply of money drastically increases, right? Because of inflation. Because there's so much more supply, the value goes down. Because remember, look, these inject liquidity. More money is being printed. More money is being printed. This is the basic law of supply and demand, right? Because there's so much supply, the value goes down. In order to stop inflation from running rampant, the government and the Fed, the Federal Reserve, have to correct the market by doing things like raising interest rates and stopping programs like stimulus checks. What this naturally leads to is consumer spending going one way, down. Consumers start worrying about things like rent and living expenses, so their attention flows to things they need to have. Since most, if not all, fashion brands are a want to have, not a need to have, they get hit hard as a result. But that's not all. To make matters worse, on the marketing side, fashion brands face a correction with Facebook ads and any other like say online business who runs Facebook ads. iOS 14 came out and completely changed the way Facebook ads run. Easy mode evaporated in an instant. The ROAS everyone was so used to seeing plummets, and many expensive agencies brands were paying for suddenly didn't know what to do, exposing their lack of skill. Many brands suddenly are struggling with things like profit and cash flow because the growth they had projected isn't happening anymore and their sales are now on a decline. Or maybe they are over leveraged on debt and the rising interest rates are eating into their profits. Or maybe they racked up too many expenses like a huge warehouse in anticipation that sales would keep going ballistic. Or maybe they hired too many people and payroll starts piling up. You see, during a down cycle, starting around Q2 2021, that's what I think, the market begins forcing efficiency, meaning brands have to eliminate everything that doesn't contribute directly to the bottom line or they risk dying off and potentially going out of business. Although sales growth is still important, profit is now more important. This forced efficiency is natural because there's just not enough new money, liquidity, from consumers, investors, VC firms, and PE firms pouring into the market to sustain the ballistic growth. You see, in an upcycle, new liquidity is just pouring into the fashion market, which means the total fashion market size increases by a lot, which is what makes sales go ballistic, right? So imagine this is like the regular fashion market size without new liquidity, right? Maybe it steadily grows every single year, and boom, with all this, at that boom, the fashion market size expands a lot with all this money coming in. New fashion brands can suddenly pick up traction very quickly and explode onto the scene. Zombie brands, I like to call them, aka brands that don't have quality products, have bad unit economics, etc., naturally grow because of the liquidity pouring in, not because their brand has good fundamentals. There's a difference. So when the market is forcing efficiency, many of the brands that exploded onto the scene are now struggling or they're fizzling out. Zombie brands were quickly exposed and many went downhill quickly or even out of business, right? So see, when the market size, when it's forced efficiency, because consumers, PE firms, VCs, they're not pumping, let's say the Fed, they're not pumping money into it in the market anymore, the market starts shrinking. It starts forcing efficiency. Same thing with many ad agencies and freelancers. Many of them were only able to get results because Facebook was on easy mode or they were one-trick ponies, not because of their skill. Once iOS 14 corrected the Facebook ad market, many of them couldn't deliver results anymore. They say things like, oh, Facebook doesn't work anymore, or this is the end of Facebook, and jump to things like TikTok ads. As the market is forcing efficiency throughout the years in a down cycle, so let's say like 2022, 2023, things seem to get worse, right? Shipping costs start going up. So we're probably like 2022, 2023, right? This is like about this part of the cycle. Shipping costs keeps going up. Product costs keep going up. The government and the Fed seem to have a hard time fighting inflation. Investors, VCs, and PE firms move away from the fashion market. And it's just mostly bad news everywhere. But this is actually a blessing in disguise. How? You see, a down cycle is when the market is generally the least competitive because of fear and the conditions are harder, right? So around the least competition is down here. Many zombie brands are wiped out or are still struggling. And with fewer fashion brands exploding onto the scene, the market is less crowded. which means there's more market share up for grabs for strong brands who have good fundamentals like quality products and profitable unit economics. So the past couple of years and even now is actually the best time for strong brands to efficiently scale. Competition actually increases during an upcycle because things seem to get better and better. So more brands aren't inferior anymore. So the most competition, I'd argue, is during an upcycle. The least competition is during a down cycle and near the bottom of the down cycle. So if strong brands are able to survive and still grow in a down cycle, they are way ahead of most of the competitors and are well positioned to take advantage of the upcycle. We've been in a down cycle for roughly 3 years now. The more we are in a down cycle, the closer we are to an upcycle, right? It goes the same way, right? Which leads into the next section, which is why I think we're at the beginning of the boom, the repeat of 2020 to early 2021 right now. History doesn't repeat, it rhymes. I like that saying. These are some key data I see that tells me that we are at the beginning. All right, the US presidential election is this year, 2024. Whenever there's a presidential election, the government tends to inject more and more liquidity into the market. And the Fed incentivizes spending by doing things like lowering interest rates as we get closer to the election. The market then starts slowly going up and things slowly seem to get better instead of getting worse. Things keep getting better and better as we get closer to the election, and then all of a sudden, things go ballistic during the election. See, 2020's election was between Biden and Trump, and it was insane in the markets, not just the fashion market. This year is another year between Biden and Trump, meaning what happened in 2020 to early 2021 will most likely be happening again this year. Roughly around May 29, 2024, the US government started buying back treasuries up to $2 billion per week. So I got this data on this date. Maybe they've been buying it earlier. What this means is that yield goes down and riskier assets go up. When riskier assets go up, people are more inclined to spend as they are making more money from their risky assets, which is bullish in investing terms. Core PCE has lowered today, which is around May 31st. So core PCE stands for core personal consumption expenditures, right? Quite a long one, PCE. It's the main measure of consumer spending on goods and services in the US economy. Without going into too much technical detail, if core PCE is lowered, it shows that inflation is slowing down. Since inflation is slowing down, it means the Fed will most likely lower interest rates, which means markets will go up and consumer spending increases and it kicks off the positive flywheel again. Around May 31st, the Fed said interest rates can be cut if inflation isn't exactly at 2%. What I think this means is that even if inflation is higher than 2%, they may begin lowering interest rates. You see, the Fed is one of the biggest influences in how markets perform. So anything that they announce is intentional. They have a plan and they want the markets to react a certain way. So if they say something like this and the core PCE is lowered, it's a fairly strong sign that things are slowly getting better and better. I say slowly because even though all this good news came out, I don't really see the markets uptrending a lot yet, which means it can take a bit more time and closer to the election for things to start going ballistic. Now, what to expect in this upcycle? You see, during an upcycle, everything will be going up and things get better and better, like I explained in the market cycles earlier. I don't think online sales will be as ballistic as in 2020 to 2021 because during that time there was the lockdown, right? Unless we have another black swan event like that later this year, which I hopefully not, right? But there is a nuance where in this year everyone was in lockdown, so literally all the attention was just jammed online, like it had nowhere else to go. See, and also, but we still should see ballistic growth in the fashion market online and in person, right? Because it's the market cycles. Probably just not as ballistic as this, unless black swan event occurs. See, competition actually increases again because, again, the rising tide raises all boats. Many investors, VCs, and PE firms will shift their attention back to fashion and invest or buy fashion brands since the market's back. New fashion brands will explode out of nowhere and achieve crazy growth. Zombie brands will naturally grow. The cycle repeats. Most fashion brands will fall into similar traps in the last upcycle. They will get caught in the hype and start getting extremely greedy with growth because everything feels so easy. They think this will last forever and start leveraging a lot more debt. They think they are some genius and their ego gets in the way. They start focusing on PR headlines about how great they and their brand are, and many other similar things to the last cycle. So typically, like if it's a fashion brand's first cycle, and let's say they don't watch this video or they don't really understand market cycles, they will typically make some of these mistakes. Right? And then they'll hope then some of them will learn in the next cycle. The more we see this happening, the closer we are to the peak of the upcycle. Then when we peak at the upcycle and begin the down cycle again, a bunch of new zombie brands will appear in the market and get squeezed over time, repeating the down cycle. Now, how do you prepare for the upcycle? See, the first is by understanding the fashion market cycle, which if you're at this point of the video or the document, then you have a fundamental understanding of it. I suggest the best way to prepare is to not do the mistakes most fashion brands make in an upcycle, like avoid getting caught in the hype, avoid leveraging a lot of debt for the sake of top line sales growth. Don't make huge bets that don't make financial sense, like renting a huge warehouse just because you anticipate more ballistic growth. Understand that the main reason for the ballistic growth is the market itself, not just because of the brand. Be grounded on the fact that this won't last forever. The more we are in an upcycle, the closer we are to a down cycle. It goes both ways, right? The closer we are, the more we're in a down cycle, the closer we are to the up. The more we're in the up, the closer we are to the down. This doesn't mean to be conservative during an upcycle. You should take full advantage of the upcycle, right? Just take full advantage of it without making the mistakes most brands will make. Easier said than done, of course. So, in conclusion, for now, this is where I see the fashion market going and why I think the fashion market will be experiencing a boom similar to the 2020 to early 2021 this year. Again, I may be wrong. This is just my thinking and opinion based on data I have access to and my experience in scaling fashion brands for over 4 years. We'll see how things play out. If there are any major updates, I'll make a video on it and post it on updates on our Instagram at DigiCeption. So here's some next steps. If you're interested in more actionable fashion ad content from us, check out the rest of our videos on social media on whichever platform you're watching this on. If you prefer like more market updates and videos, if you like this, if you like this kind of topic from us, then just let me know in the comments and for feedback. Or if you don't like it, also let me know, and then I can adjust from there. If you're interested in working with us, just DM us on Instagram at DigiCeption for more info if you're watching this on Instagram, or check out more info in the video description below if you're watching this on YouTube, and I'll see you in the next one.